Why do traders insist on doing this? Hi, it's Charlie giving you today's video. So what am I talking about? I'm talking about in trading, so many traders go against whatever the price action is doing. So I've got a chart up here of the pound dollar. And since about the middle of April or so, I think it was the 22nd of April, the pound dollar made this pullback low. So since early April, I'm recording this video on the 3rd or 4th of June, 4th of June, and the pound dollar has been going up. Now, 74% of traders, retail traders right now, are short. Okay? And this is so typical of what goes on all of the time, and it's frustrating as hell. Now, of course, technical traders at various times, people who are good at trading, are going to be short for all sorts of other reasons. You know, the pound on this very day, for example, is declining. But so, of course, on this particular day, there's likely to be fresh people who are shorting intraday. But that's not what I'm talking about. We've got 74% of traders are short, and their average short position is prices at 127.62. It's over 100 pips lower, so it's right down here, and that's their average. So that tells us what? That people have been shorting through all of this, and they're obviously holding on to their shorts. Now, I'm not talking about, like I said, technical traders who are just trading and then they use stop losses and they're getting in and out of their positions. That's fine. Everyone's going to have a reason to be both long or short in the market. What my beef is here is people who indiscriminately short without stop losses and they add to positions. Let me tell you a story. I've just been told this literally today here. There was a lady, this was in South Africa. She had something like a 5k account, or I think it was something like that, and she took it up to 500k in 17 days. How? By adding to trades as they went against her, and she got away with it. And so as a trade would go against her, she'd add into it, and then if it reversed, then she'd end up just coming out. No stop losses. Funnily enough, did she manage to keep that money? Of course not. In the next trading series, she gave it all back and her original capital as well. It really, really doesn't work. And so if you use it with stop losses and correct risk management, then you can use martingale type techniques where you take an initial position. As it moves against you, you might have a few levels. So let's say I wanted to buy this. Okay, so the overall move is the upside, and let's say okay, I want to buy this on a pullback. So for whatever reason, I want to buy some here, but if it comes down some more, then I'll buy a bit more here and maybe a bit more here. So, and I'll say, okay, well, I'm going to position size manage. So I'm going to put a third in there and a third of risk in there and a third of my total risk in there. So I've and with a stop loss wherever it might be. So that is a trader who's got a plan. They've risk managed it. That's different. That's not what I'm talking about. What I'm talking about is what retail do. They sit there. I've got the stats. That's what I've just said. 74% of traders are short the pound dollar right now, and their average short position is at 126.46. That's their average. So that suggests that yes, there'll be new short positions up in this zone, of course, but it also, if that's the average, that means that there's been a fair few shorts that were put in back down here all through this as well. So please stop doing it. Probably most people who watch this channel don't do this sort of thing, but if you know of anyone, please try and encourage them not to. It's a recipe for ending up blowing your account. What it does is for large periods of time, you can get away with it. So you can be underwater, no stop losses, and and the market will run so far against you. Maybe you add some into your trade, and if the market rolls over, like if the pound was to carry on rolling back over now, then it flatters you. So you think, oh, I was right after all. I was right to not put a stop loss in because look, it came all the way back over. And that's the attitude of a lot of traders. The problem is, we're not bothered about the ones that come back for you. It's that one trade that doesn't come back. It's that one trade where it just keeps going and going and going. And then you keep on adding and adding, no stop losses until you blow up. And so that's my point here. I've got countless stories on this. There was a story of a lad a couple of years ago, I don't know, 2 or 3, 4 years ago, and he was trading New Zealand dollar at the time, got massively underwater in a New Zealand dollar position. In the end, couldn't do anything about it, lost loads of money, And so please just use risk management, use stop losses, stop trying to be right. And I'm saying this, like I said, I'm preaching to the converted here in the main, but if you know any traders who do this sort of thing, please pass this on to them, because it's not about trying to be right on your trades. That's not what trading is about. Trading is about the overall profit factor, so to speak. Are you overall profitable? But with given risk. And if you don't use stop losses, then you don't know what your risk is, and ultimately it will come back and bite you. We never do that in our trading room. If you do want to join our community, by all means, come across to charlieburtontrading.com. You can sign up at any time and join our community. We have a great community of traders here, and so do check us out over at charlieburtontrading.com. Other than that, I shall leave you to it. Enjoy the rest of your day.